Hey folks, LA Little here with TA Today. Going to look at the financials. They're the opportunity this week, it looks like, from a sector's perspective, for two reasons. One, you got a lot of earnings, and earnings is going to be quite important this time around. They're pretty much priced for perfection, not only in financials but elsewhere, but also because the disruptor in charge, Mr. Trump, has issued a quote-unquote truth, saying that just over a week he's going to start freezing all the rates that credit card companies can charge to 10%. And that's a massive decrease. That's at least 50% in most cases. And so all that impact is going to hit first thing Monday, the latter, and then earnings throughout the week. But what are the markets going to do with it? And let's take a look at the latter first, which is the Truth Social Trump tweet. Now, looking at this truth, it looks fairly straightforward. It just says, hey, we're going to do this. But it does say right here he's calling for a one-year cap. And that's a little bit ambiguous, especially for Trump. Usually he tells you what he's going to do. This one says what he's going to do, but maybe he won't, maybe he will. So maybe that's going to be a question. We'll have to see how they treat it. I suspect we should treat it as a truth that, in fact, on the 20th, this is going to start happening. That's the way he seems to do things, so we'll take him at his word. And if we do that, then the question is, well, what's the impact? Well, if you take a look at the companies that issue credit cards and have balances on them, you'll find about 18 companies that are in this business that have significant revenues from it. And I've listed them here, impacts, so forth, but primarily impact on share price. And then I've also got an earnings date out here because we're going to look at earnings. If you look at the impact per share price, these are top three, right, that should get hit hardest. And beyond that, the impact is not that great, mainly because, Goldman Sachs is very diversified, so is Bank of America, etc. So don't expect these companies to give you a lot of bang for the buck. Matter of fact, if they take these too deep, it's probably an opportunity to buy them. Vice versa, if they don't hit them at all, well, there's an opportunity to short them, and especially the top three here. Do they hit them too hard? Do they not hit them hard enough, etc.? So that's where those lay out. You can get this. I've got a link below if you want a hard copy of it. Now let's take a look at them technically and see how they line up. We'll start with the BFH, which is the one that's is probably going to get hit the hardest. And when we look at it technically, as a matter of fact, when you look at all these financials technically, they all look pretty good and they don't look bad. These things have been stair-stepping higher over and over and over. If you look at it and you figure out the price target on the way back, given the Trump tweet, it's about 71 or so. That just brings it back into a retest regen at worst. On the monthly, if you look at it here, it's the same thing, bringing it back into this retest regen again. So you've got the same thing here. Now this one on the daily will actually break that swing point highs retest regen, and will probably break below these, or at least it should. And get you back towards this area. So anything down around the 67, 68 area is probably where you should expect this to trade back to, both technically and in terms of the estimations that I made. Is it anything wrong with this? No, they're bullish across all time frames. So is the sector that they're in. There's nothing suggesting that we're going to get a massive a turn here that's going to issue a bear market in this sector. If you look at the others, now that's the one that's going to get hit the worst, or at least should get hit the worst. If we look at the others, here's Capital One. Capital One also set up pretty nicely in terms of technically. There's really nothing wrong with it. Target on it is about 229 if you do the fundamental side that I laid out in the spreadsheet. 229 is just going to take it back to a bullish retest regen way more than 6 bars, it's a good bought. Same thing here on the weekly, and on the monthly, it's just minor. Nothing wrong with that on the NTTFs. Again, it all looks pretty normal in terms of what it should do. It technically matches what it looks like fundamentally. Last one is Synchrony Financial. Synchrony looks like about 83 and a half if you do the calculations, which is going to break this bullish retest regen, get it down around the lows here if that's the case. 83 and a half is really nothing here, nothing there, nothing wrong with it anywhere. Now if we go over to the earnings and look at the earnings themselves, what you're going to find is almost the exact same thing I just said technically about the three largest credit card holders that are going to hit. JP Morgan, they're the first ones that kick it off. If you look at JPM, they had a nice run up, made this high. They got this kind of a range bar high. They came down, kind of tested the bottom. Maybe they'll get hit a little bit Monday morning. My guess is by Tuesday earnings, they'll be up here trying to pop that top or doing it during the day Tuesday on the earnings. I think the real question is going to be on all of these is what happens after earnings. How do they get digested? Do they make new highs or do they fail to make new highs? If they fail to make new highs, then we're going to see some sort of a consolidation range set up. If they don't, and in other words, if they do make new highs, then we're going to have more of the same, and that is they're going to continue to contribute to this market's rise. And so the only issue is, have they been strong long enough, and earnings aren't going to be great enough to push them to higher highs and continue this leg higher. So in general, if we look at these stocks, if we look at the Trump Truth Social, I think you're going to see impact there, and I think that's where the potential is. If on earnings we get the inability to push higher, then we've got some sort of a consolidation. Maybe it's time to take some short-term gains. But in general, I don't think those are going to be a problem. It looks to me like the opportunity where it exists is on the Truth Social, and that is those stocks that do not have a significant pullbacks as a result of the Truth Social, potential shorts, and those that get hit too hard, potential buys. And that's the way it looks to me. If you want to stay up with me, give me a like, subscribe, and hit that alert button, and that way you get notifications whenever I put out these videos. Have yourself a great one.